Chapter 11, Statement of Cash Flows. In this learning objective, we'll understand the steps and the basic format that you need to follow when preparing the statement of cash flows. Steps in preparing the statement of cash flows. This is extremely important. Another slide that I recommend you print out, bookmark, save, take a picture of, whatever you need to do, because this is going to be the order in which you prepare the statement of cash flows. First, calculate net cash flows from operating activities using information based off of the income statement and the changes in the current assets and current liabilities in the balance sheet. Don't worry about the changes and the information you need to know yet. We'll look at those when we look in the learning objective of how to prepare the operating activities section. But step one is to prepare the operating activities and determine net cash flows. Could be positive, could be negative. Step two, determine the net cash flows from investing activities by analyzing changes in long-term asset accounts from the balance sheet. Again, we'll look in depth in another video on the investing activities section. Just know step two is how to determine net cash flows from investing. Step three, determine net cash flows from financing activities by analyzing changes in long-term liabilities and stockholders' equity accounts in the balance sheet. Again, we'll do a video on financing activities. Just know that's step three. Step four, combine the operating, investing, and financing activities net cash flows and make sure the total from these three activities equals the amount of cash reported in the balance sheet this year versus last year. Make sure the sum of those three activities equals the change in cash from one year to the next. So we're going to be looking at eGames Inc. This is the income statement that we're going to be using for this chapter. I recommend that you come back and refer to this slide as needed. Net sales are listed, and then the expenses are listed for the company. Cost of goods sold, operating expenses are listed as one big category. Depreciation expense, loss on sale of land. So apparently they sold some land for less than the book value. Interest expense, income tax expense for total expenses of $970,000. So our net income for the company is $42,000. The balance sheet. Notice this is a comparative balance sheet. We have 2 years to look at. So we need to look and see the change from 2020 to 2021 in the balance of each of these accounts. It's already calculated for you, and it tells you if it's an increase or a decrease. So if we look at the cash account, we see that cash was $48,000 and it went up to $62,000. So our increase is $14,000. That's our check figure. Our total net cash flows, when we add net cash flows from operating, net cash flows from investing, and net cash flows from financing, should equal $14,000. Then we go on down the line and see the net increase or decrease in each account for the balance sheet. This is the asset. And then here's your net increase or decrease for the liabilities and stockholders' equity sections of the balance sheet. Lastly, additional information that is provided from the accounting records. Information that we need to know to help us prepare the statement of cash flows. First, they purchased stock in Nintendo Corporation for $35,000. This is an investment in another corporation. 2, sold land that originally cost $10,000 for only $6,000, resulting in a $4,000 loss on sale of land. So that's additional information regarding that loss on the income statement, as well as the change in the land account on the balance sheet. 3, purchased $20,000 of equipment by issuing a $20,000 note payable due in 3 years. No cash was exchanged in this transaction. So this explains the $20,000 increase in the equipment, as well as the $20,000 increase in notes payable. This is a non-cash transaction. 4, issued common stock for $5,000 cash. This explains the change in the common stock account on the balance sheet. Lastly, declared and paid a cash dividend of $12,000. This explains why in retained earnings there was a total increase of $30,000. Remember, our net income was $42,000. So we should have added 42 to retained earnings. However, it only increased by 30, and that's because we paid $12,000 in dividends. Remember, the purpose of the statement of cash flows is to report the activities that cause change in the cash balances reported in the balance sheet from period to period. So the operating activities section is the first section of the statement of cash flows, and there are two different methods that you can use to prepare that section. If you use the indirect method, we begin with net income and list adjustments to net income to arrive at operating cash flows. The indirect method is the most popular method because it is easier and less costly to prepare. Almost all major companies in the United States, the book says about 99%, prepare the statement of cash flows using the indirect method. The second method is the direct method, in which we adjust items in the income statement to directly show the cash inflows and outflows from operations, such as cash received from customers and cash paid for inventory, salaries, rent, etc. If a company decides to use the direct method to report operating activities, it must also report the indirect method either along with the statement of cash flows or in a separate note to the financial statements. The total net cash flows from operating activities are identical under both methods. The methods only differ in the presentation format for the operating section. Investing, financing, and non-cash activities are reported identically under both methods. So that being said, we are only going to prepare the indirect method. You just need to know there are two methods, the direct method. To be completely honest with you, I've never prepared one in the direct method, and I'm not exactly sure that I could do it without reviewing the book. So, indirect method is how we will do it. Just know there are two methods. So we've already reviewed the basic format, but I want to show it to you one more time. So with eGames, we'll start with the operating section. We pull the net income from the income statement and list the $42,000. Then we'll go through and look at individual adjustments to arrive at a net cash flow from operating activities. Secondly, we'll prepare the investing activities section, list out the individual inflows and outflows to get a net cash flow from investing. Lastly, we'll list out the financing activities with the individual inflows and outflows to arrive at net cash flows from financing. The sum of these three numbers has to equal $14,000. Remember, we got that $14,000 from the balance sheet, the change in cash from the beginning of the period to the end of the period. So we know that this is where we have to end up. So it's our check figure. So make sure that the sum of these three numbers is $14,000.